As we approach the final quarter of 2024, investors are watching closely. The financial landscape is ever-changing, and the decisions made in these final months can set the tone for the upcoming year. Q4 is often a time of reckoning. It's a period where businesses and individuals alike take stock of their financial health. It's a time to assess gains and losses. Reviewing the past 3 quarters can provide valuable insights into what strategies worked and what didn't. It's also a time to position ourselves for the year ahead. Planning now can help mitigate risks and capitalize on potential opportunities. The decisions we make now can have a big impact on our financial future. Whether it's reallocating assets, diversifying investments, or simply tightening the budget, every choice counts. We are at a crossroads. The paths we choose can lead to vastly different outcomes. The global economy is facing challenges. From geopolitical tensions to supply chain disruptions, the external environment is fraught with uncertainties. Inflation is still a concern. Interest rates remain high. These factors can erode purchasing power and affect investment returns. But amidst the uncertainty, there are also opportunities. Market volatility can present chances to buy undervalued assets or invest in emerging sectors. Smart investors will use this time to their advantage. They will stay informed, adapt to changing conditions, and remain focused on their objectives. They will focus on their long-term goals. Setting clear, achievable targets can provide direction and motivation, and they will make informed decisions based on facts, not fear. By relying on data and expert advice, they can navigate these turbulent times with confidence and poise. Education and continuous learning are key. Attending seminars, reading financial literature, and consulting with advisors can provide the knowledge needed to make sound decisions. Ultimately, those who stay proactive and informed will be better positioned to achieve their financial goals and secure a prosperous future. To understand where we're going, let's look back. 2024 has been a year of ups and downs. We've seen stock market volatility. Some sectors have thrived, while others have struggled. The economy has shown signs of both strength and weakness. Inflation has been a persistent problem. It's eating away at our purchasing power. The Federal Reserve has raised interest rates to combat inflation. This has made it more expensive to borrow money. These factors have created uncertainty for businesses and consumers alike. Inflation is like a thief in the night, stealing the value of our hard-earned money. It's the rate at which prices for goods and services increase over time. When inflation is high, our dollars don't stretch as far. We've all felt the pinch at the grocery store and the gas pump. High inflation can erode our savings and investments. It can also lead to higher interest rates, making it more expensive to borrow money. Keeping inflation under control is crucial for a healthy economy. The Federal Reserve, or the Fed, plays a critical role in managing inflation. Established in 1913, the Fed has evolved to become the central bank of the United States, tasked with ensuring economic stability and growth. One of its main tools is the federal funds rate. This rate influences the cost of borrowing and lending throughout the economy, impacting everything from mortgages to credit card interest rates. This is the interest rate banks charge each other for overnight loans. By adjusting this rate, the Fed can either encourage or discourage borrowing and spending. When the Fed raises interest rates, it becomes more expensive for banks to borrow money. This, in turn, leads to higher interest rates for consumers and businesses. This trickles down to consumers and businesses, making it more costly to take out loans for things like homes, cars, and business expansions. Higher interest rates can slow down economic activity, but they can also help to keep inflation in check. The Fed walks a tightrope. It must balance the need to control inflation with the risk of slowing down the economy too much. It wants to control inflation without causing a recession. This delicate balancing act requires careful analysis and timely decision-making, as the Fed's actions have far-reaching consequences for the entire economy. Over the years, the Fed has faced numerous challenges, from the Great Depression to the 2008 financial crisis. Each time, it has had to adapt its strategies to navigate the complexities of the economic landscape. Today, the Fed continues to play a pivotal role in shaping economic policy. Its decisions are closely watched by markets, businesses, and consumers alike, as they can influence everything from employment rates to the cost of living. As the economy evolves, the Fed's balancing act remains as crucial as ever, striving to foster a stable and prosperous economic environment for all. Section 5. The tech sector innovation meets uncertainty. The technology sector has been a major driver of growth in recent years, but in 2024, tech stocks have faced headwinds. Rising interest rates have made it more expensive for tech companies to finance their growth. However, innovation continues at a rapid pace. Artificial intelligence, cloud computing, and cybersecurity are just a few areas with tremendous potential. Investors should be selective in the tech sector. Look for companies with strong fundamentals and a clear path to profitability. Section 6. Consumer spending, the engine that drives us. Consumer spending is a major driver of economic growth. When consumers are confident, they spend more, boosting businesses and creating jobs. But when inflation is high and confidence is low, consumers tighten their belts. This can lead to a slowdown in economic growth. In Q4 2024, it's crucial to watch consumer spending patterns closely. Are consumers still spending, or are they pulling back? Their behavior will be a key indicator of the economy's health. Section 7. Energy and resources powering through volatility. The energy and resources sector has experienced significant volatility in recent years. Geopolitical events, supply chain disruptions, and the transition to clean energy have all contributed to price swings. Oil and gas prices remain elevated, impacting everything from transportation costs to consumer goods. Meanwhile, demand for renewable energy sources is growing. Investors in this sector should be prepared for continued volatility. Diversification and a long-term perspective are key. Section 8. Healthcare a safe bet in uncertain times? Healthcare is often considered a defensive sector. This means that it tends to hold up relatively well during economic downturns. People still need healthcare regardless of the economic climate. However, the healthcare sector is not without its challenges. Rising costs and an aging population are putting pressure on the system. Investors should focus on companies that are innovating and adapting to these challenges. Section 9. Listen to the experts, but trust your gut. It's important to stay informed about market trends and economic indicators. Pay attention to what the experts are saying. Read financial news. But remember, no one has a crystal ball. Don't let fear or hype dictate your investment decisions. Trust your gut. If something feels too good to be true, it probably is. And if you're unsure about an investment, don't be afraid to ask for help from a financial advisor. Section 10. Q4 2024. A time for prudence, not panic. Q4 2024 is a time for prudence, not panic. Stay focused on your long-term financial goals. Don't make rash decisions based on short-term market fluctuations. Remember, investing is a marathon, not a sprint. By staying disciplined and making informed choices, we can navigate the uncertainties ahead and secure our financial future. Section 11. Your Q4 Action Plan. Secure your financial future. As we approach the final quarter of the year, it's crucial to take proactive steps to ensure your financial stability and growth. This section will guide you through essential strategies to secure your financial future. Here's a simple action plan to help you navigate Q4 2024. Start by setting clear, achievable financial goals. Whether it's saving for a major purchase, paying off debt, or investing for retirement, having specific targets will keep you focused and motivated. Review your portfolio. Make sure your investments are aligned with your goals and risk tolerance. Regularly reviewing your portfolio allows you to make necessary adjustments and take advantage of new opportunities. Diversify your investments to spread risk and increase potential returns. Consider tax loss harvesting. Offset gains with losses to minimize your tax burden. This strategy can help you reduce the amount of taxes you owe, allowing you to keep more of your hard-earned money. Consult with a tax professional to understand the best approach for your situation. Stay informed. Keep up to date on market trends and economic indicators. Knowledge is power, and staying informed will help you make better investment decisions. Subscribe to financial news outlets, attend webinars, and read books on personal finance and investing. Seek professional advice. Consult with a financial advisor to get personalized guidance. A professional can provide insights and strategies tailored to your unique financial situation. Remember, knowledge is power, and having an expert on your side can make a significant difference. By taking the time to understand the forces at play in the market, you can make smarter investment decisions and achieve your financial dreams. Stay disciplined, be patient, and remain committed to your financial goals. With the right plan and mindset, you can secure a prosperous future for yourself and your loved ones. Disclaimer: the information provided in this video is for informational purposes only and should not be considered as financial advice. Always consult with a professional financial advisor before making any investment decisions. As we conclude this journey through the financial landscape, it's important to remember that every investment carries risks. The strategies and insights shared here are aimed at empowering you with knowledge and tools to navigate these uncertain times. However, your unique financial situation requires personalized advice and careful consideration. Stay vigilant, stay informed, and most importantly, stay true to your financial goals. The path to financial security isn't a sprint, it's a marathon. Keep learning, keep adapting, and never hesitate to seek professional guidance when needed. Thank you for watching, and here's to a secure and prosperous financial future.